Hi, everyone. This is Chris Klein with Liberty One Wealth Advisors. And in honor of Giving Tuesday and the giving season in general, I thought it would be fitting to talk about how charitable contributions can not only make a difference to causes you care about, but also provide valuable tax savings if done the right way. So let's start with the basics. What requirements do your donations need to meet in order to unlock these tax advantages? Well, first off, you must itemize your deductions to claim tax-deductible donations instead of taking the standard deduction. Now, while this does require a bit more effort, it's essential for maximizing your tax savings. It's worth noting that there was also a temporary provision in 2020 and 2021 that allowed small charitable deductions for non-itemizers, but that benefit has since expired, unfortunately. It's also important to note that timing matters. Donations must be made within the calendar year to qualify. For example, a donation made in January 2025 cannot be deducted on your 2024 tax return. And finally, these donations must be made to qualified organizations, usually a 501c3 charity. Now, what can you donate? Well, first off, there's cash donations. These are pretty straightforward, but they can also provide the highest deduction, up to 60% of your adjusted gross income, depending on the charity you donate to. There are also property donations, which include assets like stock, real estate, or even life insurance policies. These deductions for property can typically range from 20% to 30% of your adjusted gross income, again, depending on the charity receiving the asset. One thing I would like to highlight is that donating appreciated stock is actually an incredibly tax-efficient strategy, especially for those in higher tax brackets. So let's break it down with an example. Imagine you own $50,000 worth of XYZ stock, which you originally purchased for $5,000. If you've held it for over a year, you'd owe 15% capital gains tax on the $45,000 gain. That's a $6,750 tax bill, leaving you with only $43,250 to donate, ultimately saving you $3,630 in taxes, assuming a 24% tax rate. Now let's look at another scenario where you donate the stock directly to charity. Not only do you avoid paying capital gains tax, but you can now deduct the full $50,000 value of the stock. This now increases your tax savings by $8,370 to $12,000 in total tax savings compared to selling the stock and donating the proceeds. Another way to donate stock to charity is through something called a donor advised fund. This donor advised fund allows you to donate the stock now and receive immediate tax benefits. You can then leave the stock within the fund to grow tax-free, and then ultimately distribute the proceeds to charities over time, maximizing your overall impact. And finally, another way to contribute to charity would be through something called a qualified charitable distribution, or QCD. For those ages 70 and a half and older, a qualified charitable distribution is another powerful strategy that allows up to $105,000 in donations annually taken directly from a traditional or Roth IRA. This can also count towards your required minimum distribution if you are eligible to take those, and can significantly reduce your taxable income overall. So this Giving Tuesday, take a moment to plan your charitable contributions, whether it's using cash, stock, or through tools like a donor advised fund or a qualified charitable distribution. These strategies can help you support meaningful causes while optimizing your tax savings. If you'd like to learn more or discuss your charitable giving strategy, feel free to reach out to Liberty One Wealth Advisors, and together we can make a difference. Thank you and happy giving.